Hello everyone, I'm Dr. Kunal Vijay, your ACCA mentor. We are discussing joint product and byproduct of management accounting. In the previous part, we have already understood what is meant by joint product, byproduct, and we have understood the methods of recording it, and we have understood the methods of common cost, like NRV, like marketing cost by physical method. In this part, we are going to understand the accounting for byproducts. Accounting for byproduct. So byproduct are produced as a side effect of making something. Okay, so we are not basically producing these units, and these are the product which are, we can say that, side effect. Okay, the outcome, these are the byproduct which are not the main aim of the organization to produce them, but they have just manufactured just because of processing. Okay, so byproduct have a less significant and sales value than joint product. So if suppose the joint product we are making A and B, and they are having a value of $50 per unit or $30 per unit, and we have made a byproduct, that is P, with a value of $1. Okay, we are not targeting to produce them, but it is the byproduct which is prepared unintentionally. Okay, which is manufactured unintentionally. This is the side effect. Okay, this is having the lesser sales value. Okay, and but they do not a value and are not waste product. Okay, this is not a waste product. This is a product which is as not intention of the organization, but it was manufactured. Byproduct may incur further costs if they must be separated from main product and treated before the sale. So obviously byproduct can have further processing cost as well if we want to get it separated from the main product. Examples like molasses from sugar refining. Molasses can be sold to consumer for cooking and baking, and can also be used for manufacture of drink and animal feed. As well as sawdust from the wood processing. Sawdust can create certain building materials. Okay, and straw from harvesting grains. Straw can be also be used for animal bedding and feed, and make heads or to create biofuels. Okay, these are not the main product. Main product in the sugar refining is sugar, or these are the byproduct. As well as in the wood processing, sawdust, and in the harvesting grains, the straws are the we can say byproducts which are being used in the like say certain areas. Okay, and these are having lesser sale value. Okay, now accounting of byproduct. So net realizable value of byproduct is subtracted from common cost before apportionment of to joint product. Okay, so any sales value we have realized anything from byproducts now, so they will be deducted from the total cost. Okay, so first, common cost of the joint products. Suppose we have been given $150 is the cost. Okay, total cost, and the sales value of byproduct is $15. So we will subtract $15 from 150, and the $135, this will be segregated between the joint products. Suppose we are making two products, A and B, joint product, so we will segregate 135 in the A and B. In the previously we have already discussed the methods by physical method. Okay, or by NRV or market value method. Okay, so this is also defined in this table. First of all, process cost is there, net realizable value of byproduct. Suppose 150 is there, 15 is there, so 135 is the net cost, which will be common cost, which will be apportioned to the joint product. Suppose we are making A and B, so this 135 will be apportioned in both the products. Okay, now net realizable value. How to calculate net realizable value of byproduct? So NRV of a byproduct is its final sales value minus any cost that will be incurred in separating byproduct from the main product or treating it in preparation for sale. Okay, so if we are making A and B product, and unintentionally byproduct P is created or is the output. So this byproduct having no, we can say, the separation cost, but suppose it is joint of byproduct of B and P. P is included with P, okay, B product, and we want to get it separated. That B product is there and P product, we want to separate it from B. So further processing cost, or we can say that separation cost is there, then it will be deducted from the sales value. Okay, so NRV of byproduct will be the sales value minus further processing cost. Okay, for example, if sawdust can be sold for $0.5 per kilogram, but packaging it for sale cost is $0.10 per kilogram, its net realizable value is 0.40 per kilogram. Okay, it is very simple. Okay, 0.50 is the sales value and the processing cost is 0.10. So there is 0.40 is the NRV. Okay, this is how it is simply calculated. If production cost is $1,20,000 and the process produce 100 kilograms of sawdust, then it will be 1,20,000 minus, okay, 40. How to calculate 40? 0.40 is the NRV and 100 kg we are producing it. So total value we will receive from byproduct is $40. So from 1,20,000, which is the total cost, common cost, okay, of A and B product. So common cost 1,20,000, it will be reduced by $40 because we will sell our byproduct at a $40 rupees. So our net common cost will be 1,19,960. This will be a portion in the main products. Okay, 1,19,960. Alternatively, byproduct receipts can be transferred to income and incidental other income. However, this is generally only done when the value is minimal. Okay, we'll not do that. Okay, after that, next topic is evaluating further processing viability. Okay, now we want to understand that do we have to further process our product or not. Okay, so organization must determine if it is profitable to process joint product further. This is done by comparing the incremental revenues and cost of further processing. Okay, for further processing of a joint product to be worthwhile, the incremental revenue must be exceeded the additional processing cost. So it is like that. We have the input cost. After that, we have process one, where is conversion cost is there, and we are making two products, A and B. But B product cannot be sold right now. We will have to include further processing cost, and product B is now sellable at $8. Okay, now we will have to understand it that whether we should do it or not. Okay, so we will have to take a decision that product B should be further processed or not. For that, what we should do, first of all, we will check that incremental revenue, that further processing sales revenue. Suppose B product is further sales at $8 per unit and separation point sales value, and before that product B was sold at $5. Okay, so this is the difference, that is $3. And further processing cost, what is the further processing cost? The difference between that is $3, and further processing cost, if it is less than 3, suppose $2, then we should do it for further processing. But if the processing cost is $4, then we should not do the further processing. That is simple. Okay, it is also given here incremental profit or loss. If there is profit, if it is positive, then processing is worthwhile, otherwise not. Okay, 3 minus 2 is positive, so it is worthwhile. 3 minus 4 is negative, so it is not worthwhile. Okay, this is how we will going to understand. There is joint product of A and B are output of a single manufacturing process. Each product could be sold at a split of point or process further. Okay, so we can sell both the products at A or B point. Okay, we are making two products A and B, and we can sell it at a split of point. But if we want to process it further, we can do it as well. The following information is available. What is Common cost is $50. So it is like that. Suppose from input we are making two products A and B. So the cost is $50. Okay. Here the cost is $50. Selling price at a split of point. So product A we have manufactured, it can be sold at 46 and it can be sold at 68. If we want to do it further processing, so further processing cost for A is 12.5 and for B is 24. Okay, and now we are making suppose A1 and here we are making B1. Okay, A1 can be sold at 64 and B1 can be sold at $82 per unit. Now we will have to take a decision that should we do it further processing or not. It is simple. First of all, we are selling a product at 46. After further processing, we can sell it at 64. What is the difference between them? 64 minus 46. For a product we are calculating here. Okay, 64 minus 46. Okay. Okay, additional revenue. Additional revenue, what are we getting? 64 minus 46, so it is 18. Okay, we are getting $18. Okay, and what is the cost of making it? It is 12.5. We are getting 12.5. So further processing cost is 12.5, but the sale value will increase by 18. So it is worthwhile because we are getting additional $5.5 per unit. So further processing is worthwhile. Okay, and for product B, if we want to calculate it for product B, so product B, I'm just doing it right here for product B. Okay, previous sale value was 68 and the new sale value is 82. So incremental revenue is 82 minus 68. So if we will deduct it, so we will get it 14. Okay, so our incremental revenue is 24 and cost, further processing cost is $24. Okay, so our cost is $24 and the incremental revenue is only 14. It means that we are getting loss of $10. We are getting a loss of $10. So it is not worthwhile to produce to further process the product B. Okay, so we will send the product A for further processing, but product B should be sold at split off point. This is the selling point of product A, that is A1, and this is the selling point of product B, that is B only. Okay, not B1. It is the selling point. Okay, so this is the end of this chapter. Okay, so in this chapter we have understood what is process costing, what is the split off point, what are the different points like sale point, split off point, input, conversion cost, all these. After that we have understood what are the different methods to calculate the value of product. Okay, how to get the common cost into the, how to divide the common cost between products. There are different methods, physical methods, NRV and market value methods. After that we have understood what is byproduct and what is the accounting treatment of that. We should send our product for further processing or not. So this is the end of this chapter. Thank you so much.